Hello, my name is Brad Halverson. At the beginning of this year, I became Caterpillar's Group President and CFO. Ed Rapp has transitioned to be Caterpillar's Group President with responsibility for construction industries. Today I'll review our 2012 financial results and our outlook for 2013. 2012 was in many ways a tough year. It started with an improving economic climate and an expectation that it would continue to improve as we moved through the year. That didn't happen, and the world economy began to slow at about mid-year. As a result, we faced a number of challenges. Demand slowed, orders declined, and as a result, we had too much inventory in our factories and product distribution centers. Our businesses across the company did what they always do at Caterpillar when faced with a tough challenge. They took action. I'm pleased to report that because of those actions, and in face of a tough economy, this morning we reported the best year in the company's history for sales and profit. 2012 sales and revenues were $65.9 billion, up 10% from 2011. Profit was $8.48 per share, up 15% from 2011. And that's despite an 87-cent per share impairment charge that we took in the fourth quarter related to our Seaway acquisition, which I'll cover in a minute. Operationally, 2012 was also a very good year. Our operating profit pull-through was excellent and was one of the best years in our history. It's no secret that we struggled with inventory performance during the year and had opportunity for improvement. But I'm pleased to report we made significant progress in the fourth quarter, and total company inventory declined $2 billion, an exceptional result. Product quality also improved. So did safety in our facilities around the world. As we look forward to 2013, many of the challenges we faced in 2012 are still with us. There's optimism that the U.S. economy is improving and that growth in China is picking up. That said, Europe is still very weak economically, and there are plenty of risks still ahead. As part of our financial release, we provided our outlook for 2013. We expect sales and revenues in a range of $60 to $68 billion and profit in the range of $7 to $9 per share. It's a reasonably wide range of expectations for 2013, and it reflects the level of uncertainty we see in the world today. At the bottom end of that range, 2013 would be a tough year, with sales and revenues off about 10% from 2012. If the recent improvements in the world economy continue, and we're closer to the top end of the range, 2013 could be our third consecutive record year for sales and profit. While there's uncertainty around what will happen in the world economy in 2013, we're part of a great company with a great strategy, and we're well positioned for continued growth and industry leadership into the future. A moment ago, I mentioned the $580 million impairment charge included in our 2012 results related to Seaway. As background, Seaway is a company located in China that makes hydraulic roof supports used in underground coal mining. China is the world's largest coal producer, and the vast majority of that coal is mined underground. The acquisition of Seaway is a starting point for Caterpillar's entry into the Chinese underground coal business, and we completed the acquisition in June of 2012. We have since discovered deliberate, multi-year, coordinated accounting misconduct at Seaway, designed to purposely overstate profitability prior to our acquisition. As Doug Oberhelman mentioned, these actions are offensive, completely unacceptable. But I'm proud to work at Caterpillar. We're a company of high integrity, and we do the right thing, living our values. When we uncovered this misconduct, we moved quickly and decisively to hold responsible the leaders that were directly accountable for the wrongdoing. Because this happened at an acquisition we made in China, it's raised questions in the media about our strategy in China, and I'd like to address that. China is the largest country in the world by population. It's developing rapidly, and it's one of the fastest growing large economies in the world. It's already the world's largest market for construction equipment, has a large mining industry, and is the world's leading producer of coal. It's a very important market today, and as we look to the future, we expect it to become even more so. Our strategy in China is centered around bringing our business model, products, services, support capability, manufacturing scale, supplier development, procurement, product development, and distribution to China for the long term. That will continue. The impairment at Seaway doesn't change our strategy. Now, in closing today, I'd like to thank our customers who made a successful 2012 possible, and to our employees, dealers, and suppliers for the hard work it took to get it done. We should celebrate 2012 as a great year, a record year, and then turn our attention to 2013 and make it even better. Thanks again, and you can find more information about our 2012 results in our year-end financial release, which is posted in the Investors section of our Caterpillar.com website.